Hello, everyone. In this episode, we'll discuss how to use AI for fairness. So the motivation is that there's an increasing use of algorithms for important social decisions, such as parole decisions, criminal justice, insurance, and many, many things. And not surprisingly, in finance, there's also increased use in fintech, and it has been catching up the traditional lending in recent years. So how do we use AI to help the borrowers? Well, the lenders are already using it. It's called fintech, and it's basically using the AI to screen the borrowers, like to use the data and then do the performance predictions based on the data using AI algorithms and make loan decisions accordingly, because this performance prediction, who is going to default, is going to be useful in making this decision. So in this episode, I'm going to show you what's called RegTech. It's using AI to screen the lenders. And what it does is that we observe the whole data of the lender's decision, meaning they use the data and whatever they did to do the performance prediction, you can see the decision. And then based on this data and the decision, we can use the AI algorithm here to infer the lender's decision rules. And based on that, make the regulatory actions. And this RegTech market is rapidly growing. And it's one of the positive uses of AI algorithms. So what do we use here? The first AI technology I'm going to show here is the anomaly detection. And the best analogy is probably from radiology. And what it does is that you can use the AI to predict based on a patient's profile, can predict the healthy patient's chest using the healthy patient's data, of course. And trained on AI, they basically generates that. So here's a reconstruction, here's the actual patient's chest, and here's a reconstruction using the AI, trained AI. And you can make a comparison. And if it's similar, then no problem. But sometimes you get a sick patient, and then the AI prediction, which reconstruct a healthy patient's chest, basically will have a difference like here, isn't it? And when you compare this and see a difference, then you tag it and examine the patient more carefully. So this is called anomaly detection. And we combine this technology with a new AI algorithm that we have been discussing in the past episodes, which is the deepfake, the gun. Right? And the idea is really simple, isn't it? That there are two neural networks that are competing. One is a generator. It's like a counterfeiter. It generates the fake data. And some random seeds can generate random data. And then on the other hand, here, there's a discriminator network, which basically takes the real data and the fake data that's been generated by the network. And this network's job is to distinguish between them. So the networks are trained in a competing fashion, that the generator weights are trained such that to fool, it scores more when it fools the discriminator, and the discriminator trains the weight in the direction where it correctly identifies the real and fake data. And once it becomes a stalemate, the byproduct is that the generator is able to generate really realistic synthetic data. And you probably have seen in the news a lot of these. So on the upside, that because it generates really realistic synthetic data, in recent years, they have been using this deepfake technology to accelerate the drug developments. Also in movie making, they have been using this to generate an actor how he would have looked like when the actor was young, and generate the synthetic image for this and use it in the movie making. On the downside, though, is that since it's very realistic, you have seen in the news and some of the comedy shows that it generates to fool the human eyes for bad purposes. So it goes both ways. In our example, we'll use it in a positive way. So what we do is that we'll use the combined the anomaly detection and the deepfake. And what we do is that to distinguish the loan decisions that are done by the actual lenders. And sometimes we hope the majority of the loans are fairly done, but sometimes we want to be careful that if a loan was done in a discriminatory fashion. So how do we do this? We first train a GAN based on what we think, using the data, what we think are non-discriminatory. So we train a network that basically trains the GAN from the borrower and loan profile to make a prediction of the loan prediction decisions that simulates the non-discriminatory lending rules. So once we have that, that's our baseline. We can compare those predictions against the actual loan decisions. And then we can decompose the loan decisions as, well, there are denied loans and approved loans, but there are loans that are actually both approved by the model and a human loan officer. It's a model explained approver. And likewise, there can be model explained denier. But also there are interesting cases where there are favorable disagreement, which means that the lender actually approved the loan, whereas the fair non-discriminatory lending rule predicted actually to reject the loan. So this is a disagreement which is in favor of the borrower. We can have the opposite case where the machine predicts to approve, but the loan was actually denied by a human loan officer, and do this. And using some home loan mortgages, in the public data, we actually tried this, and you can see that you can distinguish the data within the minority borrowers and white borrowers. And what you can see is that the model agreements are well, it's gone, and so they tend to be really high, since the model was trained actually with here the non-discriminatory. We think of less likely to be discriminated, so its model prediction is better here, but still both are very good. What's interesting is that there's very little disagreement on the side of favoring the borrower, meaning the loan officer approves and the machine rejects, predict rejection. There's not much difference between two ethnicities, but actually there is some discrepancy here in the unfavorable disagreement side. So this is one used to use the AI algorithms to help the borrowers get a fair lending. Thank you for watching this episode.